Hello, everybody. A warm welcome back to the stage one of API Days Dubai and Middle East. This is our day one. Prior to this, on stage one, you saw an inside-out view of open banking from various stakeholders based out of this region. We had an interesting panel discussion discussing upon the expectations, opportunities, and challenges of open banking. Then a session on the open banking in Saudi Arabia review, and then the open banking and the halal payments. Moving on this stage one, we are bringing together a couple of great speakers, people who have been there, done that in terms of open banking and open finance. But only difference is it's in a different geography. They are joining us and sharing their best practices, the pitfalls to avoid, the success stories, and whatnot. I would like to invite Hugh Davies, co-founder and chief commercial officer at OzoneAPI. He will be moderating the panel on open banking, learnings, and best practices from UK and Europe.
Thank you. Welcome. Thank you. And yeah, thank you for the invitation to have this discussion today. It should be a really good discussion. So, as Prasant said, I'm Hugh Davies. I'm one of the founding team at OzoneAPI. We're a technology platform that help banks and financial institutions around the world implement their open banking APIs. And prior to OzoneAPI, I was part of the leadership at the UK's open banking implementation entity, where I led the development of the open banking ecosystem in the UK. And we've got a fantastic panel today. We're going to be spending a bit of time talking about the UK and Europe, some of the learning, how things are going, some of the things that went well, some of the things that could have been done better. Perhaps a look around the world at some of the other markets that are starting to build on those learnings and leapfrog, and try and crystallize that into some key learnings for the region to help the markets in the Middle East leapfrog and kind of set the new benchmark for open banking and open finance. I'm delighted we've got an amazing panel with us today, so it'd be great if we could bring them on stage, and I'll start to introduce them, and then we can dive straight into the discussion. This is quite a unique one because I know a lot of the panel very, very well, and we've done many of these things before, but in slightly different guises. So it should be fun. But delighted to be joined by Helen Child, who's the founder at Open Banking Excellence. And I think I'm right in saying there probably are not many better connected people in the open banking, open finance space in the world. I think she knows everybody, so has some great views. We've got Chris Michael, who is a very good friend and a co-founder of mine at OzoneAPI. He's the CEO at OzoneAPI and was the guy that led the development of the open banking standards in the UK. We have Dmitrii, who's the Chief Operating Officer at Fintech Galaxy and the former CEO of SaltEdge. So again, Dmitrii's been around the block on this for quite a number of years. And Kevin, who is a sort of a specialist commercial consultant in the open banking space and has been sleeves rolled up driving perhaps the biggest open banking payments use case we've seen anywhere to date. So we've got some real experts. We should be able to have a fantastic discussion. And I wanted to start with, I guess, thinking about the UK. We're about 5 years into the journey now. We've got millions of users. We've got a few years worth of experience. So I wanted to spend a few minutes just thinking about kind of how is it going in the UK? Where are we up to? Helen, if it's okay, I'd like to start with you and perhaps just get your thoughts on where the UK is in that open banking journey, because it is a journey. It isn't a sort of one and done thing. So where do you think the UK is? How do you think it's going?
Hi, Hugh. Thank you. It is a journey, and I would answer that by saying that a couple of key points. The UK created the blueprint in the Fingleton report all those years ago. They said that the UK created the blueprint for open banking. So we've created the template for other countries to learn from. So there's a lot of lessons learned, and I'm sure we'll be covering those. Where are we with open banking in the UK? Well, it's definitely working. We're at the early adoption part of that phase. Very recently, OBIE, which is our competitions remedy, announced that there were 6 million open banking users in the UK. Now, that is just 4 months after they'd announced that there was 5 million users. So that gives you an idea of the growth trajectory of open banking. So are we there yet? No, in the words of Carol Dweck, it's not there yet. You know, Carol Dweck, the whole growth mindset, it's a journey. You're absolutely right. It is a journey, but it's definitely working. And it won't be long before we see mainstream adoption. So open banking payments, which is where we started in the UK, will be ubiquitous, and it's not far away.
Yeah, it's a good point, actually. And it is all about the use cases and solving problems for customers. Chris, I wonder if we could get your view just in terms of what are some of the use cases that we've seen really gaining traction and driving some of the numbers.
Yeah, I mean the first use case that really use cases that started to go live were personal finance managers. I don't think they're working largely. Some of them are, but the reason I don't think they're working is because in many cases what you need is open finance. So they're starting to work, but with access to limited sets of data. And I think open finance will really hopefully make those use cases work much better. The next use case we saw was extending that concept of account aggregation into business accounting. And that is working. And that's what really drove the initial growth 3 or 4 years ago when open banking started to kick off in the UK. That's what drove the initial growth in volumes. Cloud accounting packages doing bank reconciliation via open banking APIs. It's now the kind of predominant way that any business can access their bank account data in their accounting package, and is really valuable for preparing accounts, making tax digital, submitting tax returns, etc. So we're starting to see, or have started to also see, quite a lot of both personal and business lending driven by open banking. So more real-time access to data to enable smarter, better credit scoring, more accurate credit scoring, smarter and more efficient and more speedy lending decision making, and that I think continues to grow. But as Helen said, the payments is really what's starting to take off. It's not there yet. We're seeing some payment use cases working really well, and a good point about use cases. You know, open banking has got enormous potential to be a genuine alternative to point of sale and online e-commerce payments, and it's not doing that really in any volume at the moment. But it's
actually on that, it will be great if we can in a moment, if we switch over to Kevin and get Kevin's thoughts on the payment opportunity, and particularly the use case you've been involved in driving.
Absolutely. Yeah, I just finish on one point though. This isn't really anything to do with the kind of standards or the concept of open banking. It's to do with the implementation of it. And where you see open banking work well, it's because there are aligned incentives and it's been implemented well.
And let's hold that thought, because I think a large chunk of this discussion is going to be around what are the things that went really well, what are the things that could be done better, and learnings for other markets. I think there's a very rich scene there that we can explore. But as well as these cases, Kevin, it would be great to just get your thoughts as well in terms of where we're at on the journey, particularly around payments, because I know you've been intimately involved in driving some very, very significant open banking payment volumes in the UK.
Thank you, Hugh, and thank you for the invite. To start, I think it's always good to say nothing is perfect, and no one's really cracked this. In terms of grading, I would probably say the UK is 6 out of 10 in terms of getting it right. Perhaps they could have done better in a softer engagement approach. Perhaps they could have looked at API standards in a slightly different way. Perhaps they could have worked with the banks in a softer, more appropriate way. But the process was what the process was, and the decision made and the outcomes are what they are. But I think now there's a point where 5 years down the line, the banks have recognized the opportunity that open banking can deliver. At the moment, it's delivering for corporates, and obviously I've worked on the biggest and most successful use case in the world. But there is an opportunity to work with the consumers and to make it consumer-centric, which it isn't at the moment.
And before we get into all of the things that could be done better, could you just bring to life that use case that you worked on briefly?
Absolutely. So HMRC is that standout use case, and the concept was to see how open banking technology could integrate with HMRC systems and produce an error-free transaction. So every year HMRC intervenes and corrects more than 2 million plus payments where something went wrong. Typically the unique tax reference number is incorrect, and that leads to an unallocated payment. So what HMRC did was created the first ever public sector open banking tender, then implemented it within a 6-week timeframe from the point of award. Now that's typically unheard of in public sector, and in actual fact even in private sector, but we knew exactly what we wanted, and we knew exactly how we would integrate with the API technology, as we'd done our due diligence prior, and we'd done a proof of concept prior. So we commenced with 1 heads of duty, and around about 3 weeks in, we decided to add more. And today we've enrolled all of those heads of duties. We process more than 2.3 million transactions to date, which have a value of about £5.5 billion. Now, to put that into perspective, HMRC is the largest payment acceptance company in the UK, or institution, I shouldn't say company, institution, taking over £650 billion a year. So 5.5 billion is a very small segue into the payment vehicles and the types of payment type vehicles we use today. But it's a great stepping stone for what's going to come in the future.
Yeah, and it's certainly a catalyst use case to get that many people paying their tax through open banking payments, and they're huge numbers. We've talked about a few of the metrics here in terms of adoption, the number of users. We've talked about volumes of payments. Dmitrii, it'd be great to get your view just in terms of, are we where you'd expect to be in terms of that adoption journey? What do you think?
I think no. We are in process. It's a journey as always. And in terms, if we compare with other jurisdictions in Europe and so on, yes, UK is far ahead, maybe 2-3 years at least. But if we compare what can be achieved, there is some things that can be improved as always. What I have liked is that regulation and approach and standards and great work of open banking implementation entity and collaboration is moving the things forward. However, as always, there is some concerns from banks in terms of risk, in terms of verification, AML. Fintechs are different in terms of their understanding, their maturity level, and so on and so on. And as always, it's very hard sometimes to identify this use case, to prove this use case, to grow this use case, to remove all the obstacles in each of use cases that is implemented on the market. As was mentioned, that it started from PFM. Yes, PFM is a good way for retailers one, but does not give enough value because it's limited in terms of accounts that you have access. For corporate, it's working much better because it resolves one of the main points of any company to make this reconciliation, ERP, accounting, tax, advising, whatever. And right now with payment, there is some not clear pieces in terms of liability, in terms of risk, in terms of disputes. And this lowers adoption rate. As well, I believe that there is need for some additional education, especially for retail customer, for corporates, how things should work, why it's reliable, what is the risk, and they can compare, use efficient method for their own benefit.
Okay, no, thank you. And I mean, that kind of leads us into a kind of a helpful segue. So what I want everyone to do, put your positive hats on now. What I want to think about is what are some of the things that went really well? So if we're looking at this from the perspective of learnings that other markets can take, what are the things that we got most right? Chris, I'll perhaps start with you, and please let's not everyone try and cover absolutely everything, but if you could pick out one or two things that we absolutely got right, and then we'll kind of work through the team to build on them.
Sure. I think I would highlight really two things that I'm very, I suppose, happy and proud about what we kind of achieved together in the UK. One is that we developed the standard with the ecosystem, with the markets, with banks and fintechs equally. This wasn't a standard that was written by a collection of banks or overly influenced by the banks, and that's unusual. In fact, this is the only market in the world where that's happened. Every other market, every other standard is largely driven by banks and FIs influencing that, and I think that was important. And that led to the second really good point, was that we put a lot of stuff into the standard that went or enabled banks and fintechs to introduce services that went way above and beyond the kind of regulatory minimum of the CMA order and or PSD2. So there's a lot of stuff in there that's in what we call the premium API space in the standard. So I think having a standard that's market driven and isn't a limiting factor and is in fact an enabler of innovation, I think it's a really great starting point.
Yeah, and I know we talk a lot, right, about for other markets around the world, don't reinvent the wheel. There's a really solid base of standards that are now becoming more of a kind of blueprint to build on and replicate around the world, building on the OpenID Foundation's FAPI standard, the UK standard. There are a lot of markets that have taken that and built on it and continue to improve it. So no, I agree with that wholeheartedly. Helen, I mean, what are your thoughts? And perhaps if I might see one, how valuable do you think was a more coordinated implementation approach for the UK? Because it was very different in the UK than across mainland Europe. What are your thoughts on the things that really got right?
To complement what Chris has just said, because gold dust, what he just shared, would be what have we got right? In a nutshell, I think we've inspired the world. It is that simple, and we see that at Open Banking Excellence with our viewing figures. We get regulators, policymakers, chief execs, fintechs, big techs around the world tuning in to learn from the UK. So what have we done right? We have inspired the world and encouraged them to start their own journeys. So that is the big thing that we have got right. We really have. And being the first in the world, of course, there's going to be lessons learned. And of course, there's going to be countries that learn those lessons and can implement and adopt open banking faster. And I know we're going to talk on that. But I don't think we should lose sight that that's our big achievement. We have inspired the world. And that has had a real impact on countries' economies, on society, and on the environment as well. You know, if you look in the UK, what we've done around financial inclusion, we have made a huge impact on society, and that will continue. So those are the big sort of picture things that we've done. To go to your question about Europe, where the UK is obviously no longer in Europe, we had a very coordinated approach, a very compliance-led approach. And so we have a common set of standards, and maybe we can talk about interoperability later. But in Europe, they have a different approach, and they are at a different place of the adoption. They are not where we are on the curve. They have a lot of ground to catch up, and a lot of that, I believe, is because there isn't a common standard. So to Chris's point, what did we do right? You bet we got the standards right. You bet, of course, you know, we can improve them. It's the Carol Dweck growth mindset again. It's a constant. We're not there yet. We're not there yet. We never will be. We'll want to constantly improve. So without wanting to, you know, say anything uncomplimentary around our European friends, they could do with looking at, you know, of what we did in the UK and having a little bit more uniformity. Yeah.
Yeah, and I think, I mean, it was a little bit different, right? Because we had the competition regulator driving a very strong mandate to the 9 biggest banks, and they were mandated to follow a particular standard and to go through conformance testing. So it created a different foundation. Dmitrii, I mean, over the past number of years, you've been seeing this firsthand, both in terms of bank implementations and connecting to banks. As you look at the UK and Europe, and let's think particularly around the UK, what are the things that you think the UK got right?
From my point of view, taking like from perspective of third-party providers, I have seen what is done, how done in UK, in Europe, and even here in GCC region. So first of all, I think it's regulation and the smoothest process that allows TTP to apply for a license, to implement all the necessary compliance obligation and so on. This is a critical, and in UK it's best process that I've ever seen across Europe, across GCC region, and so on. And this gives us a lot of fintechs that can provide a lot of feedback, use cases, and grow them usage of the services. This is critical piece that was implemented in the UK. The second one, as it was mentioned with OBE, if you compare everything that we discuss right now about open banking, I suppose only OBE shares the statistics in a meaningful way that can be used to assess the market performance, number of the payment initiation, number of account information, number of customers that are using open banking, and this gives guidelines. If numbers are not growing, something is wrong. So we can sit together and find the root cause, maybe change the regulation, maybe change the standard, maybe release new version, maybe put some clarification. And this is a critical one, because if we don't measure, there is no success. Because
yeah, absolutely. And you raised a really good point there as well around that authorization process for TPPs. I think in the UK, because of the adoption of a common standard and because of the regulatory environment and the means of authorizing TPPs, I mean, I think for a large part of the last 5 years, more than half of the TPPs in Europe have been based in the UK, and it has been a much more thriving environment because of that. And Kevin, the scenario you were talking about earlier, the ability to go to market, find a technology vendor to help you get something deployed quickly in timescales that aren't normal for kind of a tax authority. It sounds like you were benefiting from some of the really good conditions that were created. Is that fair?
Absolutely, and I think you know, I've been a financial services commercial practitioner for many years, and you get excited and you want to get up in the morning when you're thinking about the tenders that your team are going to run, and particularly when it's all around innovation and stuff that's new to market or new to your client. And this was one of those where there hasn't been a payment vehicle introduced for quite some time. So this was quite novel. This was quite exciting, but actually also dangerous, because actually if you got it wrong and you hadn't done your due diligence, you know, particularly with a large customer base, you could have egg on your face. So I think what helped us was when we pulled together the documents to go to market, and that, you know, having done some soft RFI exercises previously, we were keen to focus, as you would expect, on the usual suspects of quality and cost. But actually, the framework that was produced by those on this panel as well included minimum standards that actually gave us already that sort of safeguard of minimum standards to expect in the quality. And if we think about today, there's only 294 registered fintechs who can provide open banking. We know them all. And having that minimum standard is one thing, but building to something that's uniform is something else. And I'll try an example of that. If I gave you order the same cooking ingredients and asked you to cook me something, it's highly likely that there will be some similarities, but it's also highly likely that there'll be dishes that I just wouldn't want to be served. Okay. In the instance of the UK, what we've got is actually parity and uniformity, which is really good, unlike, as Helen suggested, our friends in Europe. So I think that's a really good thing. And I can't stress enough that it's good news that the API-driven technology is so easy to connect with, has been delivered so easily into corporates, like some of the clients I've worked with. And then the fact that you can do that in such a short period of time, I think what a lot of organizations need to recognize is it's not a big transformation project. It doesn't have to cost millions and millions of pounds to do. Quickly test, learn, and implement, and you'll find that there's fantastic value.
Yeah, I'd agree with that. And I think we've seen so many interesting use cases come to market. So I want to switch gears a little bit again. I think we've done a good job of highlighting some of the things that really went well. Central implementation entity, clear regulation, common standards, authorization regime, etc., etc. It's created a very vibrant ecosystem, but it's not easy going first. Kind of the pathfinder might take the wrong turn. There'll be things that you could do better when you do the journey the second time round. And I think there's a real opportunity for markets to look at, right, what are the great things it can build on? What are the things to do differently? So let's switch gear a little bit and think about what are the things that either got wrong or could be done better as we look at the approach in the UK. And by the way, we know now there are other markets, Brazil, Bahrain has moved, Saudi Arabia is moving. Again, and how are some of these markets building on those learnings and potentially leapfrogging? I think one of the interesting, Kevin, I'll actually come straight back to you if I may. You mentioned right at the beginning about kind of the attitudes of the banks at the beginning and the way this was brought in. And I think there was a sort of confrontational stage at the beginning because there was a hard regulatory mandate being enforced on some banks. There was a body of fintechs who'd been lobbying. And what do you think are some of the learnings in terms of the way it was initially introduced, you think?
I think if you're going to mandate something as a regulator, you need to ensure that those that are being mandated to are on the journey. And the key lesson here is that they're on the journey to fund the cost of the implementation, but actually not in terms of the delivery and the outcomes. So I think, and what we've seen from that and the fallout from that is that there is still a degree of inconsistency on how the banks manage open banking and process open banking transactions. And that's, so as an example, there may be differences in the limits of open banking transactions by banks. And that's because of their risk appetites. So whilst you have consistency, you also have inconsistency in the process and the authorization process. So I often just go back to, this was a lesson that was learned. How could the regulators do more in terms of consultation and white papers, which actually involve not just the banks, but I think a wider audience. And I think if that was done, I'm not saying, I've been on meetings with banks where we've tried to implement many things and everybody sits there silently, trying not to speak first. We need to get away from that. We need to show that there is value in this and future propositions and innovation. And I think if you can demonstrate right up front what that value might be, I think there's a better opportunity to work together as opposed to it's mandated.
I think there is a really important piece there about kind of the journey and winning hearts and minds of all of the right stakeholders. Personally, I don't think any market's completely nailed that yet. I think there's, no. But there's there's certainly some learnings from the UK. I mean, Helen, again, you're a very passionate evangelist around the world about open banking and open finance. What do you think are some of the one or two of the things that actually in hindsight could have been done better or differently?
Okay, I'll give you two. One would be the business model, a more equitable, even a more equitable business model. Chris touched on it before when he was talking about premium APIs. One of our regulators, the PSR, the Payment Service Regulator, are now going through a listening exercise to address that very point. So what you have is you've got a very well engaged ecosystem, and you know, bit of a shout out to you there, Hugh. You were instrumental in helping form the UK's ecosystem. So you have a very engaged ecosystem in the UK, very innovative ecosystem in the UK, where you've got the whole world looking at what happens. I think it's the business model needs to be equitable to all partners. And we, you know, whatever has happened has happened. We need to move on and create a model that is palatable to the banks, to the fintechs, and to all those other players in the ecosystem. That would be the first thing. We had no way of calling that right because we were the first to market. Okay, absolutely no way. So this isn't a beating up exercise. The regulators acknowledge that, and we're going through a process of changing the dial there. But the next one would be looking at what they're doing in Brazil. On the 4th of May, they changed open banking to open finance. Look at what the Australian regulator, the Prudential Regulatory Authority have done with consumer data rights. You know, they have gone immediately from, you know, us having access over all of our data. It's true democratization of data. Again, I would argue it would have been too much for us all to take that on right at the beginning. What we haven't probably done is been fast enough to catch up on the open banking, on the open finance piece. And I do think that we will, unless we get a bit of a shimmy on, we'll lose our market gain on that one.
Yeah, I couldn't agree more. And I think we are seeing markets moving forward with broader regulatory agendas. Brazil's a great example, as you say, a kind of an open finance regime from day one. It is really good, though, to see banks have been shifting to start viewing this as a more commercial opportunity. We've seen NatWest come out with variable recurring payment APIs that are available to support commercial use cases. I think that's the start of a movement, and I agree. I mean, there were some kind of real challenges in the way things were defined at the beginning, though. I mean, Dmitrii, I'd be really interested in your views around some of the things that could have been done better. I mean, we had things like the crazy 90-day reauthentication rule and locked into the RTS and things like that. What do you think of some of the key learnings or things that could have been done better?
I think like it was rightly mentioned, for banks, it's like open banking in the beginning was seen as just cost center. So it's only expenses, you're sharing the data, you can monetize on it, and there is no visibility how you will monetize even. Yes, right now, after 5 years, we have started this discussion and implementing some use cases as VRP for monetization, but it's only in the beginning, yes. And for 5 years, it was like, why I as a bank should provide even any service, any SLA, any quality, invest in open banking, compliance, and user journey, and so on. What is the reason why I should do as a bank? It was no answer, and we have faced this attitude because, like, in the beginning, it was always when we have discussed it with the banks, it was following idea that we would like with the bank that will consume other banks' API as the first one, but we will be the last bank will open up an API towards other banks. But unfortunately, it was an idea that have shared common across all the banks, and they all be the last one who have opened up APIs and benefit from this. So it was like maybe a risk, maybe an attitude, afraidness of changes, and not clear visibility how they can, like how banks can monetize, how other players can monetize as well. And yes, you're absolutely right that open banking is just a beginning, because we have a lot of things that can be improved in terms of lending, insurance, investment, and so on. And this type of data is not even covered in open banking right now. It can be covered with commercial APIs. But what I suggest here to have an same level field and playing ground in terms of fees, in terms of requirements, and so on, because there is markets where open banking is built on top of bilateral agreements. And if there is like 100 banks and 20 TTPs, it will be thousands of agreements, and it will be mess, and it will not fly well, like in Singapore. So it should be somehow, we should agree inside of the market how we will monetize, how things should work, that it should be common approach, that everyone happy to use and can predict the future, not just because there is contradiction between the requirements.
And actually, you raise a really good point there as well around just the complexity of some of this. So creating bilaterals between banks and third parties to do things. I spent most of my career in some of the big banks, and the process of bringing on a new supplier or a new partner and going through that whole sort of due diligence and contracting, I think the idea of putting in place hundreds or thousands of bilaterals would probably turn most bank compliance and due diligence and procurement departments white with fear. So I agree. I think kind of creating the right market enablers rather than all these bilaterals will be really important. I mean, Chris, I know you're continually going around the world working with regulators and others, looking at some of these learnings, and very, very busy in the Middle East right now as well, looking at some of these learnings and how to create the next benchmark and blueprint that takes the learnings from markets like the UK and does it much better. What do you think are some of the key points, and which are some of the markets that you think at this point in time are getting it right and taking a leap further?
So yeah, I think the main focus of open banking and open finance should be to actually provide benefits to end personal business customers, and that's why it's important that whether it's a mandate or a premium API, that it's there to facilitate these use cases. So I think that's kind of the overarching principle. But I want to talk a little bit more about the actual technology, because what we've seen hasn't worked very well across Europe, particularly when you look at the whole of Europe, is the way that open banking has been implemented. And I would argue that's largely because of two things. One is a lack of regulatory understanding and strength in terms of driving consistency, but also it's the lack of incentives or the misaligned incentives between particularly for banks. And I think Kevin and Helen and Dmitrii have all touched on those points. But in terms of consistency, I think the key learning really is that we, in new markets that are adopting open banking, open finance, there needs to be a mandated standard. There's no point. It's a bit like being half pregnant. There's no point doing this if you're not going to do it properly. You absolutely have to have a mandated standard, and it has to be implemented properly. And if firms are mandated, then they have to implement the standard. If they're not mandated, they shouldn't be allowed into the ecosystem until they've done it properly. A market that's doing that well is Brazil. They've got a very strong, highly mandated standard, very strong conformance and certification regime. They're doing a lot of stuff well. There's still some issues there in terms of there aren't actually any fintechs in the market. Yes, it's all banks acting as fintechs, consuming other banks' APIs. But this is I think the key point. Make sure there's a strong, strong, well-defined standard. Make sure it is implemented well. There is continual oversight and requirements to be certified. You're talking about playing with customers' finances and customers' data here. You need to make sure that all firms operate in a manner that's secure, but also you need to remove all the friction that we've seen in the UK and Europe with, fintechs trying to connect to lots of different banks who do things differently. this doesn't need to be the case, and it's actually not complicated to do it properly anymore. So, you know, the regulators, I think, need to be in different markets, need to be much stricter with banks and fintechs about adopting the standard and doing it properly.
Yeah, it is. It is interesting. It was interesting to see the strength of mind of the regulator in Brazil. I mean, they've mandated a single standard. They've mandated conformance testing for every bank. I remember meeting with the central bank just as the world was going into chaos with the pandemic, and I said to them, this was in Sao Paulo, I said, assuming this is going to slow things down, and they're like, no, we're going to make this happen. This is a more important time to drive open banking, and it was impressive to see. One of the things we've talked about in this, though, a number of times is this sort of market balance, commercial balance, winning the hearts and minds, particularly of the banks, so that they're really incentivized to grab this and do it well. My personal perspective is this is a highly strategic opportunity for banks to distribute products and services in a way they've never done before, because they don't have to use their own branches and apps to do it. I don't know if any market has yet completely succeeded in that, winning the hearts and minds and getting the right sort of balance within the ecosystem. Helen, what do you think?
I think it's a really good question. Given that I'm a founder of a global community, I'm not supposed to have favorite children, but if I had to name check of a bank, I would come back to NatWest as you did before. Have they won the hearts and minds? They certainly have been front and foremost with working with the fintech. So I think probably yes. I mean, and Chris is the guy to comment on this one. My understanding is that their API architecture has made implementation with the banks, the fintechs, a lot smarter and quicker. But if you look at what they're doing with VRP, look at how quickly they got to market with Go Cardless, and so you have NatWest Go Cardless and a charity. So so they've now got open banking into the third sector. So I think that wins the hearts and minds. If you want one use case that shows that VRP is here and is a game changer, that would be the one. If you want the same use case to show how the ecosystem collaborates, I think that's a perfect one. You've got Go Cardless, who are superb at payments, and also TrueLayer have worked on VRP. You've also got Token now, who are doing a huge amount in this market with sweeping. So everybody is working with the banks, and it's not just NatWest. You've got HSBC doing a huge amount of good in terms of financial inclusion, Lloyds, Santander, etc. I feel I need to name check them all, actually.
I don't think we've got time for you to go through everyone, Helen. But no, I do agree. Actually, I think we have seen the banks in the UK have been through a bit of a roller coaster ride. It was a bit tentative at the beginning, and we're now seeing them grasping it. They've got strategic teams. They're driving this as a commercial opportunity. They'll be seeing revenues. There was a great question that came into us. So I wanted to pose this one. So there's a question around for markets that haven't moved yet. What is the right approach? Is it a regulatory-driven approach, market-driven approach, both? I have a very strong view on this, but Dmitrii, I'll perhaps get your perspectives on that first, if I may.
In terms of competition, it's better to use a regulatory-driven approach, just because it will be the same play level field, let's say, because I have faced market-driven approach. When you enter the market, you don't have enough clients, usage, and so on. Banks just don't speak with you. They ask, you should have 1 million customers, but how can you build 1 million customers without any usage, without open banking, without connections, without agreements? And it's egg and chicken problem, yes, here. And this stops the innovation. So my choice, regulatory driven.
Okay. And I'll perhaps get a view from you on this one as well, Chris, if I may, because again, I know it's a conversation we have regularly.
Yeah. Good point. I haven't. Yeah, I'm not really sure, if I'm being honest with you. I can see both sides of it. Sorry. I got a bit distracted then, Hugh. Sorry.
No worries. Well, listen, let me help you out, because oh, sorry, go on, Helen.
I was about to say, Chris, I think it comes back to the same. It all comes back to the same in the end, whether it's a market-driven approach or a regulatory-driven approach. At the end of the day, you all get to the same point in the end. Okay? Do you not think, Hugh?
So my personal view is I think there needs to be both in many instances. So if there's a regulatory catalyst, it's a catalyst, but it isn't the thing that defines the end state. That's about the market taking it further and driving commercial outcomes that work for everyone, but with a regulatory framework to ensure that it's got the right control.
So I think
in some instances where it's a market-driven start point, you actually need the guardrails and some of the frameworks to make sure it doesn't go off in directions that aren't interoperable and that create customer risk and all of these things. My personal view, I think it kind of has to be both. Chris, sorry.
I think so. I was kind of forming my thoughts there. I think when it comes to access to data, I think there's a kind of opinion which is widely shared, and I think I'm sort of on board with this, that ultimately if it is the customer's data, and by the way, not all data that banks and FIs hold about the customer is the customer's data. Some of it's derived data, like credit scoring, or data that isn't necessarily the customer's data. But if it's the customer's data, then the customer should have a right of access. Whether that means the customer's got the right of access via an API and can give that data to other firms free of charge, I think there is also an argument that says if banks provide data in a more real-time service, regular updates, real-time messaging every time there's a transactional update. So I can see there's a case for not all data that's owned or held about a customer should be provided free of charge, but I can see there being a strong mandate that's in everyone's interest to provide this kind of wider data sharing economy. When it comes to payments, I think it varies depending on which market you're in and what the payment rails and are. In some markets, banks, the central bank takes the cost, and banks make interbank payments on a faster payment rail without incurring charges. But in most markets, there's a cost that banks incur for making and even receiving payments. So, for banks to offer payment APIs free of charge to the market is an interesting one. I think the key here is the balance is going to be different in every market. I think you need to have that balance. I don't think everything should be mandated, but some stuff definitely needs to be mandated to get that catalyst. But also where you've got a sort of a good balance, where you've got this concept of premium APIs. I agree with Dmitrii's comments earlier. I think you need to have some way of removing the friction of having lots of bilateral contracts between banks and third parties. So some form of scheme or standardized process for banks and third parties to engage around these commercials makes a lot of sense.
Perfect. Thank you, Chris. And I think we could go on for a long time, but I don't think we're going to be allowed. We've got about a minute left. So what I wanted to do is ask, first of all, thank each of you. This has been a fantastic conversation, but ask each of you, you kind of one or two words for a new market. What's the big lesson? Kevin, can I start with you, please?
Awareness. That's my one word. There's not enough awareness. Yeah, you can have the best regulatory or driven solution, but if the consumer doesn't know what open banking is, what's the point?
Interesting. Thank you. Dmitrii, how about from your perspective?
measure results and fix the root cause.
That's a good point. What gets measured gets managed. I've heard that many times through my career. Chris.
I think getting the right incentives for everyone from the start, I think, is absolutely key to this. I think you know, if banks are looking at APIs as an important commercial channel for them to drive new services, then I think they'll implement APIs much better, and everyone will be better off.
Yeah, I know that's one thing we talk about a lot, kind of a clear view of outcomes, and then the right incentives to get there. And Helen, it wouldn't be right if I didn't give you the final word. What do you think?
The final word, if we use a word, is collaboration.
There we go. I like that, and I don't think it needs building on at all. So, listen, we've reached time. I wanted to thank you for what's been a fantastic and engaging discussion. We haven't had time for Dmitrii to go to the back and play us a little tune on his grand piano, but maybe next time. So, listen, thank you, everyone, and for the audience, I hope you enjoy the rest of the day.
Thank you. Bye bye.
Thank you. Thank you.
Bye.
Thank you.